Bitcoin's back down to 98,000, and in all honesty with you guys, it wouldn't surprise me if it goes down a little lower. But it did not catch me off guard because I've been talking about this potentially happening over my last couple videos, and I'm going to talk about it today. And I also want to talk about what led up to this and where we're going to go in the short and medium term going forward. So let's get right into it. What I really want to point out is just the fact that, about 2 weeks ago at this point, we really started hanging around this 50 weekly moving average, which I have stated over and over again that this is the most important indicator to be keeping an eye out for right now. Because if we get a couple weekly candle closes below this indicator, it is almost going to just guarantee that we get put back into a bear market. It's happened every other time we've gone down to a bear market. I don't think this time would be any different, but I don't think we are there yet. So we've been hugging this 50 weekly moving average, just going above it, above it, below it, until Sunday, which I said it was very important for us to get this weekly candle close above this support indicator right here, the 50 weekly moving average. And what we did is we got news that the government was going to potentially reopen, that there was enough votes to make it happen. And what happened after that is everybody started piling into the market with the hopes that the government would reopen and everything would go back to normal. And that brought a lot of confidence back to the market. And it also brought a lot of leverage back to the market. The one thing that happens when we get news events like this, and more specifically, one like the government opening up after 44 days of it being closed, is just the government opening back up doesn't bring everything back to normal. There is almost $1 trillion of liquidity that has been trapped due to the length of time this government has been closed. People need to get back paid. Government funded, government funded programs need to be refunded, and then government contracts need to be restarted, and people need to get back to work. This isn't an instant thing. It's not a 1 day thing. It's not a 2 day thing. This can easily be a multiple week process, which is why what I said over my last couple videos is that yes, the government is going to open back up, but what I expect in the short to medium term is that we are going to chop. We are going to go up like we did here. A bunch of people piled into longs, confidence came back, and we just wrecked everybody. And my opinion is we will continue this trend. As you can see over this last year, or even more, what have we done more than anything? We have chopped. Anybody who's been in this market over the last year can just completely attest that what we've done, what it feels like 99% of the time, is chop. We chop, get a move, chop, get a move, chop, get a move, chop, 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 get a move, chop. We have continued to chop, and I don't think right now is going to be any different than it has for the rest of the year, or for the first part of the year, I should say. So I believe we've come back down. We've wiped out all that leverage. As you can see right here, yesterday we had over almost 6 billion in longs. We're back down to 2.5 billion, and that's with new leverage longs that were open just today. We've wiped out a lot of leverage over the past day and probably ruined a lot of confidence on the way down too. But I don't think this move is anything out of the ordinary, and I'm being honest about that. I believe what we do is we've come back down to 98,400 here. The 98,000 range is a big portion of support, and we haven't broken it just yet. We got close. We just broke barely over 97,000. But what I believe happens is we end up getting a move back up. I'm not saying a certain price we're going to go to, but I believe the chop will go the other way. And then it'll come back down, and then it'll go back up, and we'll continue to chop as we have since the start of the year and even a little bit before that. Now, I believe that will happen for the next week or two at least. Maybe a little more, maybe a little less. But I think in the 1 to 2 week area is about how long it's going to take before some confidence and all that liquidity can really start making an effect in the market. Once we start getting to the median term, say 2 weeks from now, the liquidity will be back in the market. Probably next week, we're going to start getting blasted with economic data, jobs report, inflation reports, hirings, firings, everything under the sun that we haven't gotten over the past month and a half is going to start hitting us over the next week or 2 weeks. And then we'll have a better idea on what the Fed will do on its December 10th meeting. Quantitative tightening will end on December 1st, and we can start having a better idea of what way this market's going to go. And on top of that, with the government getting back to work, they're going to start passing crypto legislation, which Trump already stated that the minute it gets to his desk, he's signing off on it. The Clarity Act, as soon as they can pass it, it's getting signed off on. The SEC will get back to work, and they'll start passing Cardano ETFs, Solana, EXP, Litecoin, Dogecoin. All these ETFs will start flooding through and flooding in. And I believe that's when we start building up sentiment in the market, and we can start building up some confidence, and we can actually make that move up. But I want to remind everybody, as I have in my previous videos, and please go watch them if you haven't already, that in the short term, I believe we will continue to chop. If you do leverage trading or whatever trading you do, just keep that in mind, that that's a possibility, and incorporate it into whatever plan you have. This isn't financial advice. I'm not a financial advisor. Please read the disclaimer down below, but just be careful for your money, because we have a lot of volatility here, and leverage can easily be wiped out to the upside and the downside. And my honest opinion here is we will move up to the upside. And just to go a little further, but I don't want to go any further than this, is yes, we have some resistance at 107. We have some around 110. But the big resistance, in my opinion, is going to be around the 116 area, and maybe a little bit above. If we can break through that level, then I'm going to have some confidence that we will start going towards all-time highs. Until we get to that point, anything below 116,000, it just wouldn't surprise me if at any point we get to there, any point below it, and come back down. It wouldn't surprise me. Once we get past this point, I will have confidence we'll go up to new all-time highs. But that's, you know, in a little bit more of the long term, mid to long term. In the short term, just keep your eye out for this choppiness and do your best to keep your bag safe. I'll see you in the next one.